Keep watching as I show you how some of our students use the 4-hour chart to successfully trade the Commonwealth Bank during July. Hi, it's Darren Young from Safety in the Market. I'm going to look after you for 10 minutes here, just showing you the month of July and how our students went about their business. There's our disclaimer. Everything I speak about today is purely based on education purposes only. Okay, so we've been talking about the big four banks in our active trader program coaching with the students and thinking there could be an up move coming towards the end of June into July. So we had a look at the bigger picture. As you can see, this is a weekly bar chart, and each time CBA heads up into this zone, it seems to come up against resistance and turn around again. So I've just noted that, roughly speaking, this zone is 180 to 185. There's the finer details. And I've just put, we've had a weekly low here. That's a monthly low. And then we've had a first higher swing bottom on the weekly chart there. If we use that range to give us a guide, as you can see, 150% takes us into the bottom end of that resistance zone. Okay, so that works out well. David Bowden would teach us that 150% is very significant indeed. So I had a look myself at the run-up. Now, this is July. I don't normally do it this way round, but I'm just going to show you the bigger picture. And as we started into July, I was able to take our first trade and our second trade, and then I had some difficulties getting into trades 3, 4, 5, and 6 due to entry limits that we have in our rules that keep us safe and stop us risking too much. So on this daily chart, it was quite difficult. But speaking to some of our students who trade 4-hour and 1-hour and 15-minute charts and use intraday charts for their trading, they showed us how they went about their business in July. Now, I will use intraday charts to enter a market, and then I'll step back and resume my daily swings and use them as my targets for exits. All right, so this was intriguing. David Bowden himself says that swing charts only represent price action and reaction. Okay, they do not represent time like the bars can do when we count them. And that David says W.D. Gann's techniques work across all time frames. All right, so we can use his techniques intraday as well as end of day and end of week. So I threw on a bit of a swing chart to help me out when I was discussing this with the students, and it still looked very messy to me. I'm not sure what you think, and hard to trade. And then they told me they were using one of David's techniques where we ignore outside bars. So instead of putting a swing in here, as in the previous slide, I would have had a swing there, down, back up again, etc., down, back up again. What they've done is they've ignored the outside bars, as David teaches us to do as one of his techniques when needed. And if we start to then ignore the outside bars, you see we get nice longer swings and more tradable. So again, just a refresher there for that resistance zone that we will be careful of between sort of 180 and 185. So just to start things off, that was our weekly first higher swing bottom here, and we retraced about 75%, and we know that's about as far as we'll take it. After that, we're not as interested in taking long trades from here because we're probably heading down to a double bottom or beyond, and we also like to see a repeating range into that marker. So that gave us a nice setup for trade one. These are 4-hour bars I'm going to be showing you now. And we'd use that range there to give us an idea for a profit target. And that, as you can see, gives us 180.51, right at the bottom of that danger zone that we will keep our eye on. Now, trade one, if that takes place, we will get a 7-to-1 reward to risk ratio from that. I'm going to use a $5,000 account as usual and only risk up to 5%. Now, if that trade comes off, there's $1,750 reward. We'll have a look at the trading days at the end. So trade number one. Trade two now. Okay, we've got this extension now. We're starting to take out old tops, and WD Gann would like that. That's where he would be entering. And we've got ourselves another entry point and a target 181.09. So starting to delve into that zone, but I think any further than that, and we'll start having to pull down our profit target levels, but that's just into that zone there. So we're probably happy with that. If trade two plays out as it should, we get an 8-to-1 reward to risk ratio, which would bring in $2,000. It's actually a 7.987 reward to risk ratio. So for the first time, I did round it up by a couple of ticks, if you like, to make it an 8-to-1 just to keep things simple. Normally I round down. Okay, so if that was, say, 7.7, I'd just call it 7. All right. And then trade three, once again, you can see us ignoring outside bars that would otherwise throw us off track. And this profit target comes in just under that 180, so we'd be a little more comfortable with that target there. But as you can see, our students just choosing to avoid the swings that these outside bars would normally give us, say on a daily chart or a weekly chart, just so they can extend their range that they use when taking these trades. So there's a 6-to-1 reward to risk ratio, would bring in $1,500 if it came to pass. And in trade four, again, there's more outside bars here, but we're just waiting for a down, a reaction before we get in. And then as we broke above this bar here, we'd be looking to enter that trade as always. And 178 as a target would work out pretty well there. So this technique from David Bowden really looking after us and extending these ranges out for our students. Just a 3-to-1 there, that's okay. And we'll find that as we get closer and closer to that zone, the distance will get a little smaller and so will the reward to risk ratio as well, but that's okay. Trade five, another outside bar here ignored. Up we go, big gap up on the way up, which is always a good sign. Pull back here, then an inside bar, and we'd be entering at the breaking of the top of the inside bar. Stop loss down below here. And again, 179, happy with that. We could aim higher, but we're trying to keep everything around that 180 level so we don't overstep and overreach. Now, with that, I've put 4-hour up here because of this big bar here. We're entering up here. Our stop loss is down here. And our range that we're using isn't huge compared with our risk. So some of our students would then dive down into a 1-hour bar chart or even a 15-minute bar chart so they could get in closer to this turn here, and they'd be entering, who knows, maybe at the breaking of the open there as we pushed back up through on a smaller time frame chart. For me, this was a little ropey because of that risk. I'm not sure if I was taking this trade, if I would have pressed the button to go because of the reward to risk ratio being so low. But again, if you were getting in on a 15-minute chart, it would be less of a problem. So I've just put 4-hour up there, knowing that some would be jumping in on a 15-minute chart. And as we can see, look, a 1.5-to-1 reward to risk ratio. Would you be risking 5% of your account for a 1.5-to-1 ratio? Up to you. I'm not sure I would, but there it is. If you did and it pays off, that's what you would take back in. Then we come to our last sort of setup for this run and this month. And as you can see, got quite a bit of a reaction this time. You know, we like the run up here. Again, we're ignoring outside bars on the way to give us this stretched range to use. We've got a swing down and then a lower swing top here. So, you know, on a 4-hour chart, the trend is actually down at this point, which to me would be the first red flag. Secondly, if we're looking to repeat this range, we'd have to get up to 185. And as we've seen, that's right at the top of our zone that we've been looking at here. All right, so it could happen. We've been there before, obviously. We've been higher previously, but just erring on the side of caution. You know, we're called safety in the market for a reason. And we try to get ourselves out at this lower end if possible. You know, we could burst through. Of course we could. But we just like to protect capital when we can. So if, and I've put it in red there, if you were to take this trade, you would get a 2-to-1 reward to risk ratio, which obviously would bring in $500. But one other thing we have in our techniques taught by David Bowden is we have a 50% rule. So if we're taking a trade and we get to a 50% marker, we are then allowed to move our stop loss up to break even. Okay, and in your active trader program textbooks and coursework, you will learn why and how and when to proceed with that technique. So if I was in that trade, as we hit 50% there, I would definitely be moving my stop up here. As you can see, we'd have to enter up here. We'd like to enter at the break-in of this bar here. Okay, we might actually have got in, you know, if you were taking that trade, you might have actually got in just at the top of that red bar there. Okay, I've done my calculations from this open in case you missed that. And we've got the little gap, so my stop loss would now be at break even at that open there. And as you can see, 2 days later, that would be taken out, but no harm done because we moved our stop loss due to David Bowden's rule. Fantastic. Well, there's our 6 trades that we've just looked at on our 6 targets. And as you see, keeping them to the lower end of that danger zone has worked out pretty well. Obviously, some of these, as we get closer to that zone, we start looking for 150% instead of 200%. So we're not overreaching. Good to take some profit and then sit back and watch when we're advancing towards a danger zone. But as you can see, pretty much all of those 5 trades anyway hit their target. And as we saw, trade number 6 hit 50% before the market falling away. All right, so a nice little run up there, and just great to see the students adapting David's rules to intraday trading and making this run tradable and possible for them to take in some capital. Now, as you can see, I've just written down now the trading days that we didn't know at the time, obviously. And we'd like to get in early in the run. It means our trades are going to take longer, but it also means we get a bigger reward to risk ratio. So 7, 8, 6 at the top end here, as opposed to 3, 1.5, and 2. And thus our rewards are bigger. Okay, so a little bit of patience here pays off over here. All right, and there's trade 6 where, you know, we ended up break even with the 50% rule. So no losses this month, 1 break even and 5 wins, amassing to 6,375. So a good month's work there from the guys. So well done, everyone. And then have a look at August. Yeah, not quite sure what that date is, but a little double top there into our zone. Not at the top end. Didn't stop at the bottom end, thank goodness. And we had this guide from this initial first range out to tell us that that could be a place for a turn. And August, we've literally undone all of those gains in a couple of weeks, it would look like. So if you'd like to learn how you can replicate these trades, follow the link below to find out more about the Active Trader program, which will teach you how to consistently and safely build your trading account, often with 10 to 1 reward to risk trades. Thanks guys, see you soon.